In the course of trading, our businesses are poised in the marketplace to offer solutions in terms of products and services to our customers. So in the process of doing that, I need to buy stock. So you can get a loan for that. You know, we call it working capital. You have a contract, and thank God for that. But you need to, to perform this contract, and you need some assistance to be able to do that. That's why you take a loan. You take a loan because you need cash flow so that you can operate the business because of the, the cash flow cycle. There's a timing difference between when you sell your goods, when you perhaps manufacture the goods, or when you buy them, to when you sell them, to when the customer pays for, pays you for them, and so on. So to bridge that gap, you need money to operate your business. You've talked about business expansion. You need to buy some assets. You need to buy a motor vehicle. You need to buy some machines, and so on. These are good reasons why we actually take loans. Now that you are convinced why you need to take a loan, the next thing you do is what I call window shopping. You ask yourselves, what are my options? Where can I possibly get money from? And let me show you something here. We've talked about the need. I'm very clear in my mind that you have very specific needs in your business, and so you need financing. Now you need to figure out, before you even say, okay, I'm running. I see most of you go to the bank. KCB is giving us solutions, but you need to do what I call in Kiswahili, ujipange kwanza, unajipanga. And what do I mean? You look around and ask yourself, because you don't want a situation where you get to the bank and then you're asked, please mobilize 10%, and then you can't access it. So you're looking at your options. That second column is very important, and that's what James was talking about. When you're thinking about where to get money from, I know most of us like to look at it in terms of let's trade with other people's money. But how much money are you prepared to put in to fund your business? And so you will see there a combination of equity and also borrowings, loans from outside sources. So I saw most of you are saying we prefer self-financing, friends, family. It's very flexible. Whenever you're thinking about borrowing, we're talking about borrowing considerations, you need to consider how much is it going to cost me and what are the terms and conditions. And there are specific and clear advantages and disadvantages for each of these. So you weigh them, and then you can make a decision around that. I saw that quite a number of you are saying, Sarah, I fund my business from my business savings. We talked about cash reserves in our last session. So this is that rainy day. This is that emergency that can help you to fund your business expansion and all those wonderful things that you talked about. But remember, we said that that business reserve should only be used at the worst case scenario. So the disadvantage there is that will deplete your fund, and you need to make arrangements to replenish it. I didn't see anybody saying that you get funding from suppliers. But the truth of the matter is it's very important for us as business people to negotiate credit with suppliers. Because if your supplier says, it's okay, you can pay me after 45 days, you can pay me after 30 days, that allows you to use that money to fund other business, running expenses and so on. And then you can prepare yourself to pay them after. I saw a number of you talked about banks, some of you talked about financiers, and also Shylocks. So I'm going to give you this information. Do not worry about reading it, and I'm not going to say verbatim what is on the slide because I can see you can see that. But the most important thing, as part of your preparations, ukianza kujipanga before you even go out to take a loan, try to figure out how much money can I raise internally, and then what kind of help do I need, and then what are the terms and conditions? What is the cost of that? I don't want to spend too much money, in accessing finance from a Shylock. Can you imagine? 15-20% interest per month, 240% per annum. If there's another place that I can get that money. But again, it goes back to cash flow planning. And I saw that many of us are saying, well, Sarah, I'm struggling in that area. And that's why we are here to help you. So there are very distinct advantages, disadvantages. Make sure that you choose the option that works out best for you. So you have a clear need, you've done your funding options, you've looked around. Now you're at that point where you're ready to borrow. Kindly go to the chat box and tell me, ukijipanga wewe pale in your business and so on, what are some of the things that you think about, before you actually go out and get a loan? Let's go to the chat box. Let's keep the conversation alive. Please tell us, what are some of the things you consider? You're now ready to have that conversation with your relationship manager. What are some of the things that you consider? Jamie, I'm going to hand over the mic to you. And please tell us, what do our participants consider? Over to you, Jamie.
Thank you very much, Sarah. Indeed, the responses are coming here.
Mm-hmm.
Okay, let me sample a few. Lydia says, before taking a loan, she considers interest rates, repayment period. And then Gil says payback time, that is repayment period. Justice Muriuki says, I consider cost of the loan and of course repayment period.
Mm-hmm.
James says purpose of the loan, rate of interest,
how
to repay the loan and of course period. Olivia Okoth, thank you, says interest, ability to pay and repayment period. Nancy says, I consider how soon I can get the loan and interest notwithstanding. Michael Karanja says turnaround time of the loan. Let me take one last one here from Patrick, says cost of the loan and the time frame for the repayment and of course penalty. Thank you very much for your feedback, all of you, Cornelius and Eric, of course. And back to you, Sarah.
Thank you so much, Jimmy. As you can see, the chat box is alive, and that's
Indeed.
Good. That tells us that you don't just jump into, loans blindly. You're trying to position it. You're thinking, will I be able to repay, and so on. We can summarize that conversation by what you see in your screen. As you're making your considerations, utangalia the ones which have a very specific leaning towards the kind of product that you're thinking of taking. For example, am I going to take a short-term loan or a short-term or long-term loan? What is the monthly repayment? What is the cost of borrowing? What is the repayment period? I heard you talking about the repayment period. How long will it take for me to turn around? Is it secure and unsecured? But then you also have to look at the ability of your business. Now, this is where you're asking yourself, first of all, what is the purpose of this borrowing? And then, do I have the ability to repay? How do my business cash flows look like? And that's what we talked about last week. And then how much money do I need to borrow? Do I need to borrow 3 million right now? Or can I borrow 1 million? And then, so you need to figure out all that. And what about my existing loans? Do I have other loans that I'm servicing? So when you're thinking about your borrowing considerations, these are some of the things that you think about. Now, I just want to share with you what I call the business loan evaluation criteria. Before you take a loan, ask yourself these 5 questions. Just scrutinize, that proposal along this. Number 1, am I using it for development purposes, investment purposes? Is it for the business? Yes, please proceed. Is it going to generate cash for me? So, and if it's going to generate cash for me, how much and how often? Will this loan repay itself? Ama itani stress kuilipa? Is it adding to my asset base? Is the cost of borrowing reasonable or not? Now, you've looked at yourself from the borrower. What are the considerations? What do I need to ask myself before even having a conversation with my relationship manager? Now, let's flip the coin over and let's get into the shoes of the banker. What would the banker be looking at before they give you the credit that you need? Number 1, they're going to be looking at your character. Wewe ni mtu wa aina gani? In terms of credibility, are you trustworthy? What kind of values do you have? Your integrity, your reputation. Have you ever noticed that when you put in a loan application that you are visited Why do you think bank officials are visiting you? Because they want to see my business, how I do business. Yes, I agree. But one of the things they also want to do is to hold a conversation with your stakeholders, the ones they can find. Who are your stakeholders? People who interact with your business in one way or another. Do you know that loan diversion tells us something about your character? It's a character issue. Why would you tell Nyambura that you're borrowing money so that you can run your business, you can meet your costs, and then you take that money, you divert it, and you put it into, for example, a personal venture? That's a character issue. Separate your business from your personal matters. That's another character issue. Because when you ukichanganisha kila kitu, we cannot tell. So which are the transactions relating to your business and which are the ones relating to your person? What are we talking about? Character. Helen, I see you. Credit history, So you need to prepare, practice to pay on time. Pay your commitments on time. Keep good records. Let's move to the next one, capacity. Your capacity to pay. So here you're looking at your cash flows. And this is where I told you last week that there's a shift in the banking sector where credit can be advanced to you if you demonstrate you're on top of the game as far as cash flow management is concerned. To what extent are you steeped in debt? Can you juggle those balls to ensure that your business is still up and running and that you're able to repay your debts? So what are then some of the things that you can do as a business person to ensure that you have the capacity to repay? Number one, guard against loan diversions. Number one. Number two, only borrow when you need to. Jared, I see you keeping business cash records. So those are, you can see that there are practical things that you can do in your business to increase your chances. Now, collateral. We talked about, you told me that when you're considering to borrow, you will look at the product. Is it secured, unsecured? So by collateral, this is where you give an asset, you pledge an asset in exchange. Just in case I'm not able to repay, we can fall back on this asset. Now, there are certain things that you can also do internally. You need to build your asset base. You need to save money. When you save through the cash reserves, those same cash reserves can become a collateral or a security to help you when you need to borrow. You need to build your relationships so that somebody can guarantee you and so on. What about conditions? Conditions, when we talk about conditions, we're talking about conditions in the economy, but we're also talking about the conditions related to the loan or the borrowing that you want to take. I want to cross over back to you. What are some of the things that you can do as a business person to increase the possibility of you being able to deal with the conditions or understand the conditions of the loan? And then there's also capital. Here, I think I did say that, David, I see you keep a record of statutory obligations, business threats. Absolutely, I agree with you. And also capital. Make sure that you also plow in when you trade over a period of time. Before you make that decision, again, it depends on the type of business that you have. Is it a sole proprietorship? Is it a company and so on? Whatever the case, make sure that you return profits into the business so that you can grow your business. And those of you we were together last week, we talked about how to build business reserves. And I want to remind you, we said, take a portion of profits, plow it into the business. So those are the things that you're going to be scrutinized, against when a financier is making a decision to give you a loan.